So welcome again to our last panel. I'm going to present both of our speakers here tonight. The first one will be Mr. Ricardo Lopez Murphy. He's the president of the Red Liberal of America Latina, an organization that seeks to foster cooperation among liberal institutions and individuals in the region. He has been presidential candidate of Argentina, advisor of the Central Bank of Argentina, Minister of Economy, Minister of Defense. He worked as a consultant and advisor of the International Monetary Fund, the World Bank, the Inter-American Development Bank, and the United Nations Economic Commission for Latin America and the Caribbean. Mr. Lopez Murphy studied economics at Universidad Nacional de La Plata and earned a master's degree in economics from the University of Chicago. He has served as professor and chief economist of the Argentinian economic think tank, FIEL. Our second speaker is from Mexico. Mr. Juan Carlos Rodriguez Villava served as Deputy Trade and Investment Commissioner of Mexico in Chicago. In his function, he promotes the integration of the United States and Mexico economies and investment opportunities. Prior to his appointment, Mr. Rodriguez served as Trade Investment Commissioner of Mexico in Argentina and Uruguay. He holds a degree in financial management from the Instituto Tecnológico de Estudios Superiores de Monterrey in Guadalajara. Thank you very much. We'll start with a presentation.
Thank you very much for the invitation to the Harris School of Public Policy and the University of Chicago. It's a pleasure for me to be able to be here at this opportunity, and also to come back to a place where I have to study so hard. I never forget my experience here. I studied many hours, and never was enough. Because I discover every week, every day, that they are studying more than myself. Being trained that way, I would like to tell you something before my going to focus on the issue of the panel. First of all, it's not true that in Chicago we didn't study Keynes. To tell you the truth, I learned about Keynes mainly in Chicago. We studied in a deep way. For example, I remember reading a lot about monetary policy. There is a very beautiful book, nobody reads, but it's a very nice book, A Tract on Monetary Reform by Mr. Keynes. One of the most beautiful books and very orthodox from our point of view. Obviously, they show us to study the most orthodox Keynes. But also, we study a lot about the consumption function, the idea of trying to understand saving and investment and the problem of how the people decide how to spend a long time. The idea of the long run was very important. When I was here, sometimes I don't remember exactly when, but Franco Modigliani came to Chicago and he said that the monetaries where the long run is around the corner. I mean, we were all the time trying to understand the long run. Because in the long run, you have lack of shock or surprise. You understand. For example, one point they forced us to focus was on the corner situation, on the extreme situation. And that is a way you learn a lot. Let me say another thing that is important to understand our the approach, the Chicago approach. For example, we discuss a lot about income distribution, a lot. For example, one of the points I learned a lot and was very difficult to accept at the beginning is that there are equalizing differences, that you cannot have equality of outcome if there is human capital. That is an idea that when you explore, you begin to think that equality as outcome. cannot be a good target. Equality at the beginning of the game is one thing. Equality at the end of the game was a stupid thing. There is no soccer match. There is no boxing match if at the beginning you know whatever you do, you obtain the same answer, the same outcome. That idea that income distribution was something that is not an ethical problem, not only an ethical problem, was a discussion, a very difficult discussion. For example, one of the problems is how you ensure the case of the oil investment. The profit of those that discover oil is incredible. But if you take into account the uncertainty, the risk they have to take, on average, the profitability of investing in oil is more or less the profitability in other industry. The problem is the variance of the outcome is very extreme in the oil industry. And all those discussions are very difficult to translate in public policy, and you translate more in institutions. What are the rules of the game? How stable are they for fostering a good economic outcome? Well, but I will not talk anymore about my experience in Chicago. Now I will address the issue of the conference. This is a very important explanation of what has been the development of international trade and global GDP. This is very important for several reasons. First of all, the level of GDP increased around 10 times from 1950 to this moment. 10 times is a very large number. We have been the beneficiaries of the long history of humanity. We are enjoying something that the human being has not been able to enjoy during all the history. For a long period of time, the humanity, the economy was stagnant. I mean, they had no growth at all. In the last 2 centuries, we have been growing, and the growth has been fast and fast after the Second World War. This is something very important because you see some linkage between GDP at global level and the growth of international trade. Look, GDP increased by 10 times. International trade increased by 45 times. And this is very important to have in mind. Growth is associated to being part of the international community, of being partner of the international exchange. This idea is a basic idea in economics. This is Adam Smith. That was one of our heroes in Chicago. The idea, because it's important, because it's a fundamental point. What was the idea of Adam Smith? That the key for success is the division of labor. I mean, the size of the market. How to increase the size of the market? Through exchange. That is the way we increase the size of the market. And there, the point I want to make today is the key for success in development, and some of the explanation why Latin America is performing better than in the past, is that we open our economies to be part of the international community. Not as much as we have to do, but we were opening our economies, and perhaps those that opened more were the most successful one. For example, Chile. Let me say that this also will help us to address the other issue. How to increase productivity? You have 2 ways of increasing productivity. One is through specialization. The other one is very clear. You have to accumulate resources. You have to invest more. You have to increase the human capital. You have to increase the infrastructure. That means something that Latin America has not been able to deliver. One of the main problems, the main explanation of why we have not been so successful is that our saving and investment is very low. It's very low, and one of the explanations why it's so low is perhaps the lack of stability in the rules of the game. The key issue to have a lot of saving and investment is that you can go through and along the time, and that the only way the humanity discovery is possible is through property. The private property is the key to create wealth, and that is a very difficult discovery for the history of humanity. All the time we want to change that rule. The idea of the communists is to try to avoid that agreement. Never works, but they try one another time, every time. Let me address. I try to put together all the agreement of regional integration around the world. Why there are so many agreements? The truth is, there are so many agreements because we fail in delivering as a world community a new Doha agreement. I mean, if we can agree in the World Trade Organization a total liberalization of trade, that is a lot better than regional agreement. But the regional agreement is, I would say, a shortcut to deal with the problem that is so difficult to be able to deliver an agreement at world level. Maybe because in Europe the production of agricultural protection is a so difficult issue. Maybe because in Latin America there are countries that do whatever they can to avoid the agreement, and in Asia they have some traumas about the problem of hunger. They suffer hunger, and they in the past, and they have a lot of cultural ideas of not to depend a lot on food industry from the rest of the world, and maybe that create very difficult point. But my idea presenting all of you this number is to say all around the world during the period between 1980 and 2012 we have been growing in integration. The growth of trade, of export has been fantastic during that period. Maybe it's not enough, maybe there are windows of opportunities, but the growth has been very important. I try now to focus on our countries. In general, the performance of them has been very good, but be careful. In our region, we suffer or we enjoy an incredible period of good news. And that incredible period of good news make it very difficult to understand the data. What were the good news? We have an incredible shift in the price we obtain from our export, because the price of our commodities multiplies several times. For example, in the case of Argentina, when I was Minister of Finance, the price of soybean was $150. During most of this time, the price was $600. With $150, the situation was desperate. With $600, you enjoy almost an incredible abundance of resources. Not to say the case of Chavez. When Chavez won the election, the price of Venezuela basket was around $8. The basket of Venezuela during most of the time was close to 100. That means, and that you have to have in mind, that means that the price of oil multiplied by 12. But that is not the very important point. The point is the profit you obtain from that. Because part of the price of oil was cost. As the increase in the price skyrocket, there is a sort of magnification effect. I mean, the real excellent growth not 13 times, growth maybe 30, maybe 40 times. The embarrass of riches was fantastic for our countries. That make very difficult to made a difference, like we saw in oil producer country between group 1, group 2. They are the same group, but I will address by other procedure in the next few minutes. Let me show you our numbers, and you will see that we have. I try to put difference between the groups, but it was not easy for me to obtain a very clear answer. But in any case, in general, measured by whatever yardstick you use, Latin America did very well in the last 10 years. We have been enjoying a dramatic tailwind, and when you have tailwind, it's almost irrelevant what you are doing. One indicator that is easier for all of you, and I think it's a very important one, and I want to focus on that, is foreign direct investment. If you want to know if a country is performing well or performing bad, you have to see two main points. First of all, if the investment are going there. Second, if the people are moving out or are moving in the country. For example, nobody wants to go into Cuba. Nobody wants to go to invest in Cuba. Why the people want to invest incredible amount in Chile? For example, they have been able to increase the investment. They were receiving a lot of investment. Think that Chile, the size of Chile is around 1/3 of Argentina, and they are receiving a very large amount. To say the truth, they are receiving almost twice the amount we are receiving. The key relation between trade, growth, and investment is foreign direct investment. In general, the countries that are growing faster receive a lot of foreign direct investment. For example, what we have been discussing before, the recovery of oil-producing countries. If you want to put in production the Campeche Gulf or Venezuela again, the size of the investment you have to do will be fantastic. The problem is how to persuade the foreigners to go again, not to say my country. Because in my country we did so many things that are very difficult to show the people that we change. But I will address that issue at the end. In general, I will say that the Latin American countries that are participating aggressively in international trade and preferential trade, Chile, Colombia, Peru, and Mexico, are doing very well and exhibit a better business climate, and also the investment results are better than the rest of the region. I believe the case of Peru, the case of Chile, the case of Mexico. Maybe the people are not aware of how much has Mexico progressed. But I will tell you, when I was young, many decades ago, every 6 years in Mexico there were a terrible crisis. The truth is there are no more crises in Mexico. Maybe the performance is not as good as we want, but the idea of suffering terrible crisis every 6 years has disappeared. And I believe that the changing in the institutional framework due to the NAFTA has been very important for that outcome. And that is the point. The point is the international trade agreements are not only important because improve the resource allocation, are more important because improve a lot the institutional framework and the confidence of that rules will put a limitation over the policies that our government will follow. Let me now address the case of two countries that are different. When I explain all about the trade agreement, the investment, and I'm trying to respect the time schedule, the case of Venezuela and Argentina are very different. Those countries are changing a lot. They have put a chain control. What is a chain control? It's lack of convertibility. If you have pesos or bolívares, you are not able to obtain foreign currency. That is a very important difference because that creates a very sharp gap between the real price and the price they pay to you. And that gap, in the long run, is a sort of very high tax on investment. For example, if you put, let me address the case of my country. The gap between the free exchange rate and the official rate is 100%. What is the meaning of that gap? The meaning, in the case of Venezuela, is 300% the gap. What is the meaning of that? The meaning of that is like an investment tax. If you have such an investment tax, nobody invests. You will not sell your dollars that are valued 10 pesos to the government in 5 pesos. Nobody will do that in Argentina, in Venezuela, in any country in the world. That lack of convertibility creates a sort of distortion that is very difficult to overcome. And you need to think that this is a very important problem for the ability to be part of the world, to be linked to world trade, to world investment. The black market creates another problem, that is illegal activities. If you have for a long period of time illegal activities and you want to, quote unquote, normalization of the situation, you need to offer a whitewash. I mean, to create an amnesty, to put the money that were out of the law into the law, to be able to work in the formal economy. If you produce, in the case of my country, every 4 years we deliver a whitewash. A whitewash is a sort of amnesty. We say, if you don't pay taxes, don't worry, we forgive you. But if we forgive you every 4 years, why you will pay taxes? Because you will be awaiting the next amnesty. And that creates a sort of disorder that is very difficult to fix. That is related to black market. That is not enough. We don't only have a chain control and black market, we have also export and import taxes. If you have import and export taxes, what is the meaning of export and import taxes? Bastiat, an economic thinker of many centuries ago, said that the taxes are like travel cost. Put a tax on trade is like to increase travel costs. If you increase a lot travel costs, why you don't go to Mexico to have a haircut? Because it's too expensive. The cost of traveling to deliver a service is one of the explanations why we don't trade everything. To put taxes on trade is like to increase the cost of shipping. And that explains why our economies are being closer and closer and closer. The other problem is we have quantitative restriction. Quantitative restriction, the experience of Venezuela and Argentina is not very well understood by the foreign community. For example, to give you an idea, we have been able to bankrupt the meat producing capabilities of Argentina. And it's like I try to play soccer with Messi and humiliate him. It's impossible because all the potential are there and we have been able to bankrupt that. In Maracaibo, in Zulia, I suffer electric power cut during all the day. To have an energy crisis in Venezuela, in Maracaibo, you have to make a big effort. They have been able to deliver that. And I mean, this type of quantitative restriction and crazy ideas are destroying our economy. Because of that, it's not very easy to put in group 1, group 2, because we are not linked except with Venezuela with any other. We put also another restriction that is, in Venezuela also, no remittance on profit and royalties. That means, if you go to invest in our countries, you will not see any more your money. Now, we try to say you, please, come and invest here. And you say, well, but you will not let me. No, this is a transitory phenomena. We will, no. That is a key structural factor to change perception. Now, to change perception is not a problem of political speech. It's not a problem of psychoanalytical narrative. It's a problem of institution and constraint. You have to believe that they have changed. And the only way that they have changed is if you change the governments. The governments in a very radical way. I mean, all those that are in government cannot be in government, not now, but for a very long period of time. And that creates a political dynamic that is very complicated for our countries. Because the only way they will not come back if the situation finish in a total disaster. And that is not a good way to learn about mistake in life. If you need a total disaster to correct yourself, it's a very bad process of learning. Well, the other problem in our countries is confiscation. We confiscate time to time. For example, it's true. We decide that what you think is yours is not it's not anymore yours. And when I say that, I not say that we did to the foreigner only. First of all, we did to our own citizens. For example, we confiscate the pension saving for the old age. After we did that, you have to prepare they will go for you. When is the only question. Now, that explains also why it's so difficult to be partner at the world level. No respect of rule of law, local and international. For example, that is another point that you have to have in mind to think about the transformation in the future. Given our history, we sign all type of agreement at international level to ensure the investors that we will not do what we did in the past. And they believe that we will fulfill the rules that were in international law. Wrong. We forget about all the international agreement and we confiscate despite what commit ourselves not to do that. That are the cases that are before the World Bank, and the very difficult problems, because in the long run, that was very useful in the past to bring investment to our countries. Now, as we use and destroy that type of insurance, I am not able yet to think what we have to do to make them believe in us. The other problem, and you see happen in both countries, is very high inflation. Very high inflation. You remember that at the beginning, when I told the story about my studies in Chicago, I referred to a very beautiful book. It's a beautiful book, one of the most well-written books that I read in my life. Is A Track on Monetary Reform. That is where John Maynard Keynes explained how the Soviet regime used the inflation tax to expoliate their own people. Inflation is the most important way our countries use to extract money from our people, to increase taxation. And the taxation of inflation in the short run can be fantastic. In the case of Argentina, it's around 6 to 7% of GDP. It's an incredible number, and very difficult to control. Obviously, if you suffer that type of taxation, what will you do? The answer is very clear. You will look for a currency that they don't control. And that explains why the people buy foreign currency. Even the price of the foreign currency is not, maybe it's overshooting. But what is the only, in Venezuela and in Argentina, they are the only countries that there is a scarcity of dollars. With Bernanke and quantitative easing, there are dollars everywhere, except in our countries. And the explanation is that our quantitative easing is nothing to do with Bernanke. We know how to issue money in an incredible way. Well, I will finish to understand that it's very difficult to link ourselves to international trade, because one of the most important lessons from a very important professor of the University of Chicago, a Nobel Prize also, Robert Mandel, was that you can replicate the taxes or subsidies coming from the trade, I mean tariff, you can replicate or do the same through the internal tax system or through internal subsidies. That was a famous paper by Mandel, following our learning and all the story. But in our countries, if you try to understand our system, it's a crazy system. We have an amazing type of subsidies and cross-subsidies. For example, the price of gas in Argentina is around 100 of what is cost to our government to import. You see, we pay $17 by any unit of British thermal unit, and we sold domestically at 20 cents. You know, if you issue that type of subsidies, how you compete at world level. In Venezuela, the price of gasoline is 160 of Colombia. I will finish, don't worry, I will finish in a minute. With this type of subsidies, the linkage to the international community is impossible, because everybody that works with you and trade with you will ask why you have such a crazy system. That crazy system also explains why nobody invests. Imagine that in Argentina we import gas at 17, we import from Bolivia at 12, we pay domestic producers 6, we pay another producer 2, we sell our domestic consumer at 20 cents. Have you imagined how to manage that system? That system is so crazy. That was a discovery also by a professor of the University of Chicago, that the idea of trying to planning everything is impossible. A famous professor of Chicago, many decades ago, wrote a very beautiful paper, how to use the price system as a planning device. That was Scalange. I hope I show why it's so difficult to understand our success, because in Latin America there are many different stories about what have been doing with a very good circumstance. Thank you very much.
While the presentation is getting set up, I would just like to briefly thank to the coordinators of this event for having us here, to the University of Chicago and all the students that made this possible. I celebrate the fact that in these panels there are two fascinating and contrasting case scenario. Mr. Lopez Murphy talked about Argentina and Venezuela, and I'm going to talk to you about Mexico. I'm going to talk to you about Mexico on hard facts, on what we have been doing, and where is it we want to go, and how we want to establish and position ourselves in the global markets and in the global community. I couldn't agree more with Mr. Lopez Murphy about the importance of productivity, the importance of trade, and the importance of foreign direct investment for growth and its relationship with growth. We've learned this in Mexico since our inclusion to the GATT in the mid-80s, to the start of NAFTA, and now developing in a post-NAFTA world. This event couldn't come more timely with the visit of President Obama to Mexico last week. It's fascinating and encouraging times for the bilateral relationship between Mexico and the U.S. There's a strong focus on establishing more matters in this agenda, not only focusing on security, but also the presidents in both their speeches have broadened the specter of the agenda. Some very interesting points about it is the establishment of a high-level group for economic discussion, in which members of cabinets from the U.S. and Mexico will meet on a regular basis, including the Vice President of the United States, in order to discuss how we can potentiate the trade between our two countries. And this comes in a great time in which our trade is also soaring to historic levels of more than 500 billion a year, which is more than 1.3 billion a day. So these are very interesting times for Mexico and for NAFTA in general. Chicago and Mexico are truly, and I would say Chicago, it's a truly NAFTOnian city. The bonds in terms of trade could not be more and better represented than by the commercial activity that Chicago has and its relationship with Mexico. So we believe that Mexico is at the right time and at the right place. We believe that we are strategically located in the world, and we believe that the change of the dynamics in the environment, of the economic environment, is making more and more that Mexico has a privileged position and a position of growth for the next years. We have a skillful and talented workforce. We have competitive costs. And as I mentioned, this is not something that happened overnight. It's a process that has been undergoing at least for the past 25 years. This is a graph that I really like to show, which shows the evolution of inflation, export, and international reserves in Mexico. We are right now at our historic high levels of $160+ billion. Also at exports with a controlled inflation of lower single digits over the last years. And what I would like to take out also from this graph is our exports in the 1980s mainly were focused in oils and derivatives of oils. And right now, the majority, more than 80% of our exports are medium and high-tech manufacturers and exports. So this also speaks about the evolution in terms of adding value in the industry of Mexico. There are in terms of Mexico's strategy and what ProMexico and the competency of ProMexico for the future, their main axes, which are crime prevention, the fight of poverty, and obviously education, but also economic growth and global responsibility, which ProMexico, the agents which I represent here in the Midwest, has a direct involvement with these two sectors. Furthermore, we have seen very strong political consensus in our country to potentiate the reforms that will allow, the structural reforms that will allow a growth in the next years. We've seen it with the passing of the labor reforms. We've seen it with the telecom reforms. We've seen right now with the undergoing of the finance reform, and obviously the much advanced energy reform that we are seeing, again, political consensus for this to go through, and this will potentiate, or we believe that will give a strong platform for growth. This is an index of The Economist in which we see Mexico's ranking in terms of overheating economies. We are positioned well at the beginning of the graph, and it rates 27 countries. As you can see, we're well below countries like the Philippines, like Chile, like Saudi Arabia, etc. In terms of competitiveness, indexes regarding our competitiveness, such as the World Bank Doing Business, we have advanced and improved our position over the last years, but also in the competitiveness reports of the World Economic Forum and the IMBD Competitive Yearbook. As I mentioned before, Mexico is a country committed with trade. We have more than 12 trade agreements and actively participating in negotiations such as the TPP, as you're very well known, and also in the bilateral agenda. These agreements and treaties give us preferential access to more than 44 countries, which is more than 60% of the world's GDP. And obviously, we're a part of NAFTA, which is the largest economic region with $18 trillion. According to consultant studies, Mexico still has an average cost advantage compared to the United States of 21% over 19 strategic industries. We're seeing much more a phenomenon of companies that were established in countries, in Asian countries, that are coming back to Mexico, looking for a regionalization in NAFTA and the benefits of having a much more efficient supply chain within the region. But also Mexico is a young country. You have a population median of 26 years, which tells us about a demographic bonus that will allow a constant, skillful pool of labor available for the next 20 to 25 years. In terms of availability, we are graduating, Mexico's graduating more than 115,000 engineers a year, which is double per capita than the US and more than Germany, Canada, and the United States. United Kingdom and Brazil, I'm sorry. And as we can see, we have an availability of skills that is above countries such as India, China, or even Brazil. In a study performed by Harvard and MIT about economic complexity, Mexico ranks among the top 20 countries, recognizing that the country holds a vast amount of productive knowledge and the capacity to transform it. And it talks about the technologically sophistication and how also our economies are, at least in the North American region, are intertwined. There are products that cross the border more than 12 times before getting to its finished state, which is a very interesting figure about how complementary and bounded together our economies are. And as I mentioned before, when it comes to medium and high-tech exports, I believe that it's remarkable that Mexico is in third place when it comes at its percentage of GDP by 2011, just below Germany and South Korea. In industries that are not evident, but that we're seeing a fast growth over the last years, such as the aerospace industry, and obviously the automotive industry, but also other industries such as the healthcare, etc. Again, industries such as aerospace, Mexico is the number 6 supplier to the American aerospace industry. Companies have grown by 4 times since 2005. In terms of medical devices, we're the largest exporter to Latin America. And again, we have a very strong participation in the automotive and electric and electronic. A figure that we like to mention is that we're the leading flat television exporter of the world. As you can see, Mexico has been developing clusters or areas through our different regions, specializing in different industries. And we can see it evidently in the Querétaro region, the aerospace industry, or in the Nuevo León or Puebla with the auto industry, or electrics in the area of Baja California. The products developed and produced in Mexico are very sophisticated, going from vehicles, probably very well known, about the new investment. Audi is opening a new plant in Puebla, 1.2 billion investment. But also we have a strong investment when it comes to generation of energy and advanced technology in electrical and electronic engineering fields such as Siemens, etc. Aerospace as well. There's been an analysis done in variables that we believe that are strong factors in this publication by Jim O'Neill. And we've analyzed variables of macroeconomic environments, openness, domestic market, demographic, etc. And Mexico's outlook looks very strong and very positive for the following years. This is a chart comparing the variables to counterparties in other countries. There is still a strong challenges ahead, but we believe that Mexico is in a path that it's directed towards growth with rule of law and generating an economic platform that will allow this growth. So we believe that this is a tendency, and that we're going to continue to grow for the next years. And by seeing this political consensus and by seeing how the economic actors are interacting in Mexico, we can certainly believe that this is a tendency that we're going to look in the future. There's a strong consensus between consulting groups that place Mexico as top 10 economies. Nomura says number 16th, number 6th by 2025. But the reality is that major consulting firms and academia place Mexico as leading 10 economies of the world in the next 25 to 50 years. We've seen the news all around the world. There's a strong wave of positive news about what's going on with Mexico. We believe that, again, this is a trend that will continue to go forth. I'm going to give you a very, very brief panorama of our relationship with the world. We have a surplus with North America, slight surplus with Latin America, deficit with Asia, and a slight deficit with the European Union. So the efforts that ProMexico, and you're going to see this in the next chart, is that not only we want to potentiate the trade that we have with North America, but we're also strongly looking for a diversification and having the ability to be more positioned in other markets. So you can see in 2009, 84% of our exports were heading to North America. 2012, it's 80%. So we've seen the differential going to other markets in the world. Again, as Mr. Lopez Murphy was just mentioning, this is a table that speaks about foreign direct investment in Mexico and how we've been receiving, ranking at number 17 and growing from the 18th position. And this is a graph that for me is very, very, very interesting, that speaks not only on how foreign direct investment is behaving in Mexico, but how companies, Mexican companies, are going to the world to establish operations, generating jobs. And over the last decade, there was more than $60 billion US invested by Mexican companies abroad. And this has a direct impact. I'm sorry, the bullets are a little bit are not very, very, very well. But a figure that it's important is that 6 million jobs in the US depend on the trade with Mexico. And this is 250,000 in Illinois. So this is a strong statement of how it not only has a positive impact and it's not interesting Mexico as an opportunity for making the supply chains more efficient, but also as a huge potential market and a potential market that sustains the active creation of jobs here in the US. I think that there's a very, very important figure that I would like to mention as well. The amount of products and services that the US sells to Mexico doubles the amount of products and services that the US sells to all the BRIC countries combined. So this gives you a very strong overview about the size of the Mexican market. And this is a comparison about the real average wages. In Asia, we see a constant inflationary tendency over the last years. And a graph that is also very important related to our demographic bonus, speaking on the evolution of the active population and the adding of the workforce in the next years. Being said that, I would like to make a brief infomercial about ProMexico. We're the Economic Development Agency of Mexico, and we have a very defined strategy of potentiating these industries by acting as a one-stop shop for everything that is related to exploring and generating business opportunities with Mexico, whether it's foreign direct investment, whether it's the internationalization of a Mexican company, or the support of the Mexican exporting capacity. And we have a very well-defined strategy, a strategy that has very well-defined industries such as the ones that I've mentioned before, and that we believe that are going to continue to generate economic well-being for all the region. Some of these industries, again, as I mentioned, is auto, electrical, renewable devices, agri-food, mining, etc. So, as we said in Mexico, bueno y breve, doblemente bueno. So, I believe that for me, being in Chicago, it was important to go to the hard facts, to the hard figures, and talking about the quantitative matters in Mexico nowadays and what the outlook is for the future. And we believe that the future looks bright. We believe that if we can capitalize this political consensus, we're going to have a much more stronger image vis-a-vis in the international community, and this will generate wealth and growth not only for Mexico, but for NAFTA as a region and the world. So, thank you very much.
Thank you very much. We're going to start now with a Q&A. Got some questions for Mr. Lopez Murphy. Despite what economists usually expect, high inflation plays a key role in the political base of President Chavez and President Argentina. What do you think? Why do you think that inflation has not affected the political capital of Chavez in Argentina, and Chavez in Venezuela, and Cristina in Argentina? And along the same line, if you were to transition from exchange and price controls in Argentina to a free regime, how will you do this smoothly to avoid political turmoil?
First of all, the problem of inflation. Inflation is like a drug. At the beginning, you enjoy because the issue of money create the feeling that you are not under the constraint of normal people, because you have your income plus the transfer that came from the government with new bills, with new printed money. At the beginning, the inflation created a feeling of improvement. As time passed and the people discover how to avoid the inflation tax, the costs are enormous. And we are, I think, ourselves and Venezuela are going from the first stage to the second stage. In the second stage is when you suffer, because the cost you pay for inflation is higher than the benefit you receive from it. And this is growing and growing and growing until you reach the stage we used to have before the 90s in Argentina, when we have hyperinflation. When you reach hyperinflation, the cost is unbearable. You cannot withstand the cost. And that is the reason why we changed in the past. We suffered a first shock of hyperinflation in July 1989 of 5,000 a year, and a second shock in March 1919 against March 1989 of 21,000. After that, our society was ready to make a big change. And during a period, to have you an idea, we move ourselves for a system like the currency war. The currency war is we equalize our currency to the dollar, one by one. What is a currency war? It's like a straitjacket. You know that the straitjacket you put over a guy that has a behavior, and you have to put several people to take him to put the straitjacket and tight the straitjacket. Incredible, we put the straitjacket over us willingly, voluntary. Why? Because we were afraid of ourselves. That type of change is perhaps the explanation why we address the issue in the past, and why many people in Argentina and abroad believe we will never do again. This time is more difficult, and we will address the second problem. Why this time is more difficult? It's like if you are caught in infidelity. The first time, you can say, okay, I am not a perfect man. The second time, you can say, she was terrible. She persuaded me of wrong behavior. I was not aware of what we were doing. The third time, you have to show you are crazy. But tell me, what will you do the fourth time? And we are in that situation. We did many times, and what is a monetary system is like a marriage. You have to persuade the people to hold your printed paper and believe that that is wealth. And you will not cheat on that. But they know that you cheat before 4 times. I mean, cheated that has been discovered. The other don't count. The problem is how you persuade the other to demand the currency you issue. under the constraint of what had happened. In my opinion, the only way to address, I have several ways to put the institutional framework in fiscal matter, because all the time we made this mistake because of bad fiscal behavior. We need a restriction on fiscal behavior, a restriction on monetary behavior, but mainly we have to persuade foreigners, and most difficult, our domestic citizens, that our leadership has changed. It's something very difficult, very difficult. Maybe some times ago, I am not anymore available, but sometimes I thought that if Lopez Murphy win the election in the first round by 65%, maybe the Argentine has believed they change. But I never was able to deliver such a victory. I mean, you need something that is very different to our past. And I don't know how to do the framework, the institutional framework, I know very well. The problem is how to make it credible. For all the partners, we need to believe in that arrangement. And I think the way that this has been done in other countries was through a dramatic transformation, not only of institution, but also of cultural values. I mean, you have to believe that this type of behavior that I show to you is not a good one. And that means a very dramatic change in cultural values. And this is beyond economics to put forward.
Thank you very much. For Mr. Rodriguez,
Thank you.
how do you believe this could also be for the two of you. How do you think that the TPP will help Mexico's performance, and in that case, Chile, which is also in the negotiations?
Well, I certainly believe that Mexico is married to the idea of free trade. It's married to the idea of free trade and has also performed very, very positively over the last past years. Mexico is becoming more competitive. Mexico is becoming more productive. And the possibility of having more access to other markets as a union, then it's a potential of placement of more products and know-how from Mexico within this arrangement. And I think there's another interesting part of it. The link and the interest, the bilateral interest of Mexico and the U.S. in this TPP. And is the fact that if we consider that from the Mexican exports, there's been a strong drive from President Obama administration, at least in their last messages, of increasing the exports of American-made products. Mexican exports, for every dollar of Mexican exports, 40% come from the United States. So Mexico has established itself as a platform for growth in international markets. So I believe that the TPP in the long run will potentiate this competitiveness and the force that we have as a region.
Thank you. Mr. Lopez Murphy, I have a question here. Do you think that if countries like Venezuela and Argentina buy to investor trade arbitration, could that help as a signal to help these countries foster trade?
Well, I think one of the points we have to start, if we want to normalize, in the case of Venezuela, in the case of Argentina, is to normalize our situation with the world community through a sort of accepting the rules of independent bodies of the international community. That will be the beginning, and I think that is the easy part that we can deliver to fulfill some behavior. For example, in the case of Venezuela, It's different from our case because they have a lot of potential that we don't have. I mean, the case Venezuela is a lake of oil. That if they behave in the right way, they have an advantage that is incredible. Let me give you an idea of what I'm meaning. In Venezuela, there is around 300 billion in Spain, in Spanish, I mean, billion of our type, that is 10,000 barrels for each Venezuela inhabitant. 10,000 barrels means that only for oil they have a wealth of $1 million. To be poor under such amount of resources, you have to make a big effort. Now, if they move from that, the policy and the institution they have been using to a more rational institution, the chance of them for a jump are fantastic. In the case of Argentina, the problems are more difficult. Why? Because we are not a society that depends a lot on natural resources. We depend a lot on human capital, on confidence, on trust, on manufacturing, on maybe natural resources, but not so important as in the case of Venezuela. One problem we have is easier to solve, but it's a very difficult problem nowadays, is we cheat on our statistics. And we risk of being expelled from the IMF, from the World Bank, because we cheat on our statistics. We cheat. Why we cheat? Well, because we have an inflation of 25% a year, and we say we have 10. We say we have extreme poverty of 0, and you visit Buenos Aires outskirts, and you know that cannot be true. We increase the growth of our GDP because if you are training in economics, if you reduce the inflation, the deflator of the GDP, the difference is growth in volume. I mean, more real GDP. And we have been overstating our growth rate. We have an incredible growth rate that were not true. And well, the first step, I think, is not in trade, it's in statistics. Yes. That we will follow a procedure like we follow in the past. That we have one of the best statistic bureau in Latin America. Well, that is, I think, the first step. The second step is going to international institutions and saying we will obey the rules. Third, we have to make all the reform domestically.
In that sense, there was another question that I want to take on by the recent sanction of the IMF to Argentina and the threat of being even expelled. What do you think will be the outcome of that? How do you think that will proceed?
You know, the procedure of the IMF took many years. It's like building a distillery in Venezuela, in Mexico. I mean, take a long time. And I hope we will do something to enhance our statistical procedures that avoid that terrible outcome. Because, you know, being expelled of the international community because you cheat on your statistics is not a good reputation. It's incredible, I have to say that. But the problem is not that we are cheating. They discover us. And, well, you have to fix that. But that is, I think, the first thing we have to do, to put clearly for everybody that we will not cheat anymore.
Thank you very much. A question for Mr. Rodriguez about the recent scandal in ProMexico, in Mexico, corruption. What do you think that Mexico can do to clean that image, especially in the institutions of international trade?
I believe that there are still challenges ahead of us. I believe that previous administration and this one wants to emphasize on the rule of law as a general and institutionalization of Mexico. I believe that everyone has a responsibility, from citizens to public servants, to be a part of this movement of assuring a rule of law. And I believe that it's an ongoing process. But I also believe that Mexico has changed, and that Mexico is no longer tolerant to many of the activities or behavioral forms of the past. Mexico has become a stronger country when it comes to its citizenship, and I believe that it's a challenge and it's an ongoing process for all Mexicans.
Thank you very much. Mr. Lopez Murphy, how will you think to eliminate the gap between the official and the black market exchange rates in Argentina and Venezuela? What do you think could be a mechanism to achieve that?
In the short run, it will be very difficult because the shock that you produce will almost make impossible to govern the country. But in the past, the way to deal with that is to have a two-tier exchange rate system. First, one, a financial exchange rate that you channel there all tourist financial payment and financial revenues and tourist movement of capital and a commercial rate, and try to put them together in a framework through time in I would say 1 or 2 years. Going in a different procedure means such a devaluation that will make it very difficult to withstand for our societies. That except in hyperinflation, when you lose any monetary anchor, it's very difficult to open an economy and make such a sharp adjustment from one day to the other. I believe one way to do that is to have a financial rate and a commercial rate and make them converge through times. And that is not so difficult. We can do that. And I would say most of the distortion we face now almost disappear immediately if we do that. The only distortion that remains is between the commercial rate and the financial rate, but we can close through times. If you have such a big gap as we have today, and to try to unify the exchange rate in one movement, I'm afraid that maybe there is no governance able to withstand such shock.
Thank you very much. Just last question for both of you. First of all, Mr. Rodriguez, and then Mr. Lopez Murphy, if you want to take that. We've been talking today, most of this panel, we had two conflicting stories, Mexico and Venezuela and Argentina. But to each of you, what do you think are the success stories? What can we learn from the countries from Latin America that have been successful in attracting investment, in opening their economies and getting more productivity in capital?
I think the Pacific Rim has been very successful. I mean, Mexico, Colombia, Peru, and Chile. They have focused their economy in the world community. They have been under a big structural change, as we see in Mexico. I go very often to Mexico, and I discover there, I went many times to Hermosillo. There you see an incredible change from 30 years ago. The same happened in Peru. If you go to Lima or other cities in Peru, if you used to go 30 years ago or 20 years ago, you cannot believe what has happened. In the case of Chile, the change is more pronounced, and I will believe that these successful cases will be very important for our future. I always thought I worked as a consultant many years ago in China, and, at the beginning of the process. And one thing that I remember discussing with the leadership, with the technician, with the professor, was why they changed. And one of the explanations was they were looking what had happened with the diaspora, with the people from China and with the neighbor that lived China. They were following very closely what had happened between North Korea and South Korea. What has happened in Taiwan, what has happened in Singapore, what has happened in Hong Kong. The assessment of them is that the other system was performing so well that forced them to reassess what they were doing. And I believe under the change in China, this example of the neighbors was very important. In my view, the success of Mexico, Colombia, Peru, and Chile will affect all of us. Mainly, initially, countries like Brazil or Uruguay that are now in the very open economy, but not in the crazy gang. That change will affect them and force them to integrate more in international trade, in investment. Some of them are doing very well. I believe Uruguay is doing very well. Brazil is not doing so well, but it's an economy with a lot of opportunities. And I believe the Pacific Rim, the countries in the Pacific that are doing so well will be an example for all of us. And when in our countries we discuss the narrative, what we have to do, we will not look for East Asian miracles or Europe or other countries. We will look at our neighbors. And I think that will be a very important fact in the structural change in Latin America. And that will influence a lot. I am not optimistic as our Mexican friend. The idea that the Mexican GDP per capita will be 100,000 per year is beyond my imagination. But I think you will perform very well. Colombia will perform very well, Mexico, Peru and Chile. And that example is affecting us a lot. For example, the idea that there is no exchange control, that there is integration to the world economy, that the economy is growing very fast, that there is a modernization, that the change in the quality of export, that's very important. At the beginning, Mexico export only natural resources. Now, natural resources almost disappear from Mexico. All of this will affect a lot our discussion, and I think this will let us to change. Unfortunately for me, I will be too old to see that. But that is the way I think we will understand our mistake and correct our mistakes.
Thank you very much. Mr. Rodriguez.
I'll go very, very quick. I think that regardless of establishing a forecast, I certainly believe, and I think that there's a consensus that Latin America as a region has all the potential, has in terms of energy, in terms of human capital, in terms of resources and the capacity to add value. And the more that we can align that to a project and the more that we can become states that follow rule of law, the more that we can achieve our potential.
Thank you very much. Now we'll begin to close the event. Ana Aguilera, a student from Venezuela, will take the word. Thank you very much.